this are likely to be that the rail companies and the intermodal marketers. For those of you who aren't aware, intermodal is any multi-mode movement of transportation, but most commonly when discussed in this environment, it's a combination of a truck going on to a train and actually being moved via train. That's usually a long-haul move. Some of the largest customers for intermodal companies and the largest customers for the rail in general are UPS and FedEx. Most people don't realize that. A lot of trucking companies too, but they'll put their trailers, directly on the train to move across country. So, for a long distance move from a major market to another major market, where transit time is not of the most critical nature, intermodal moves are great, and the rail is actually improved in terms of service time and transit times that they're able to provide. So it's becoming a better option all the time. I think I also mentioned that CSX is talking about the fact that they can move a ton of cargo 423 miles on a gallon of fuel. So obviously, that really is a big benefit for them, and it becomes more of one as fuel continues to go up in cost. So I think we were just finishing up with contract management, and I'll move forward into shipment execution. And shipment execution improvement focuses on the appropriate method of delivery for each shipment, that is, each and every shipment. The key areas we want to look at here are current mode utilization, how mode decisions are made, product characteristics, what are the dimensions, what's the density, what's the product freight classification, are the classifications accurate, are you aware of the NMFC, do you have FAKs or hundredweight tiers, and what about imports and exports, the harmonized tariff schedules, are you doing duty drawback, what's your shipment frequency, are you utilizing drop trailers? A lot of different things to be looked at here. And where we, think we can find improvement, there's a lot of areas, and I've named a few here: optimizing mode utilization by location, establishing direct ship programs, looking for backhaul opportunities, and shipping points compliance programs. And as I said, a number of others. Shipment execution for large shippers may include consolidations, floating or mixed multimodal pool points, continuous moves, and dedicated fleets. Here's what these mean. In example 1, we show the impact of moving from shipping each shipment direct from a single point in Los Angeles to a multimodal pool distribution model whereby deliveries are made in volume over the rail to major markets where they are transferred to local carriage to do final delivery. In example 2, we show the evolution of moving from single shipments outbound from one distribution point to multiple stop shipments where we combine 2 or more outbound shipments onto one truck, here in the second box in example 2. And then finally to continuous move shipments, here in the third box, that have multi-stop outbound legs combined with inbound shipments of materials or returns. Powerful optimization tools enable shippers to identify and capture these opportunities. It's simply a matter of better utilization of assets, which enables cost reductions. Mode optimization is a key to proper shipment execution. Mode optimization is choosing the right mode every time. Here's a case study. For this particular pharma client, selecting between LTL and UPS hundredweight was a major issue in itself. You see the difference in the way these two different industries price their products is the first problem. LTL pricing is zip code based, where each additional mile of travel increases the charge. Parcel companies price their product based on, and their hundredweight, based on shipments by zone. The map here depicts the UPS zones from this client's shipping point in Memphis, Tennessee. You can see on this map that if I was to ship a package to Palm Springs, California, or to San Francisco, California, via UPS hundredweight, the price would be the same. Whereas via common carrier, the price would be somewhat higher, as a truck has to travel an extra 486 miles. Like most shippers, this company had taken their best educated guess to determine the weight break, at which point they would move shipments from hundredweight to LTL. They actually did a reasonably good job, but you can imagine, based on the example I've given you here, 50% of the time they're going to be wrong, hence the need for mode optimization. But indulge me while I explain how we showed them the situation was far more complex. We picked one of their largest shipping lanes from Memphis, Tennessee to Albuquerque, New Mexico. We told them we would give them the benefit of the doubt and imagine on the first day of the year in 2008 they had determined exactly the right weight to select between hundredweight and LTL, and it happened to be 300 pounds. Now we added the fuel surcharge of the two modes into the equation. To give you a sense of the difference, hundredweight fuel ranges from about 4 to about 8 or 9%, while LTL fuel can go as high as 35 to 40%. Frankly, fuel prices and surcharges in 2011 are eerily similar to what they were in 2008. So here's what happens. And remember, on day one, which is January 1st of 2008, they have the weight break exactly right at 300 pounds. So that's the red dot over here in the middle of our chart. What happens now is they start shipping and fuel prices start moving. So although they are right January 1st, by March 18th, the cost of fuel for each transaction has made it $13 and almost 50 cents more expensive for them to make the choice. And in this case, they're picking the wrong mode. Because of the increase in fuel price, they should be picking the parcel mode, and instead they're picking LTL, and it's costing them $13.50 a shipment. By May 27th, it's costing them $24.04 a shipment. And you can see throughout the balance of the year, all the way out until October 14th, it continues to be less expensive for them to choose the small package or parcel option. On October 14th, they're right back in line. That 300-pound number is exactly right, and it's exactly what they want to be. Of course, by November 25th, they're $16.91 wrong. So fuel's come down. Now they should be picking LTL, and they're picking small package. What's the impact of all this? Well, where they should have selected the small package carrier and they picked LTL, it cost them, which is the amount above the line, cost them $300,000. And for where they picked small package and they should have picked LTL, it cost them $90,000. So all told, it was almost a $400,000 impact.
That's amazing stuff. What sort of savings did that represent to the client?
Well, as I recall, this company had a small package spend of somewhere around $2.5 million annually. So this dropped, say, about 15%, I guess, right to the bottom line. It is important to understand that capturing these savings can only be achieved with TMS tools.
Hold on. TMS tools. What's TMS?
Sorry, Ken. Once again, transportation management systems. So these are automation tools designed to allow you to automate the process of, in this case, carrier selection.
Thanks.
As a matter of fact, thanks for the lead-in, because TMS, transportation management systems, shipment execution works best with them. And they enable us to do all the things we talked about earlier, but they also allow us to do rate shopping, least cost routing, document creation, including bills of lading and barcodes and any other shipping documents you need to produce, as well as single source for tracking and tracing all your shipments. So again, very powerful tools to allow you to automate your processes. And here's the basic process flow for a TMS system. Keep in mind, a good TMS is available as a software as a service solution, or can be fully integrated with your ERP, WMS, and other critical decision support systems. Data management relies on available accurate shipment and payment data for ongoing management, exception reporting, and to identify future areas for improvement. When it comes to data management, here's what to ask for. Are you getting paper bills or electronic invoices? Is there any automation to your processes? Is there a data repository for this information? And when it comes to your audit, who's responsible? Are the procedures documented? Is each bill rated against an actual tariff, or are they spot checked? Are invoicing accuracy and timeliness part of your carrier performance metrics? GL coding procedures. Are GL codes being accurately applied? Is the GL process automated? Can multiple cost centers be broken out off a single invoice? And how about the payment process? Are your bills being aged? Do you pay your bills via check or EDI or ACH? How about international invoices? Is the bunker charge on your ocean bill accurate? Are the Incoterms correct? How about the peak season surcharges? Are dimensional weights being applied accurately? Areas of opportunity here, clearly automation, data warehousing, line level auditing, aging of bills, and automated electronic remittance. We really believe the devil's in the details.
At this point in time, we'll take another break for our third polling question. Okay, we're back. You left us with the devil is in the details.
Yes, and frankly, the idea that the specifics of each and every transaction we believe need to be looked at, and we do so. In fact, sophisticated auditing tools allow you to call out audit errors and uncover hidden accessorial charges automatically. Even more important is providing the information to do deeper dive analysis. Here we are showing the client an example of why their freight accrual bucket is always low. On this particular shipment, it only costs about $9, but they forgot to charge the large package surcharge, which is over $61. We call this revenue recovery, when we work with a client to find the holes in their freight accrual bucket and patch them up. So in this case, a sophisticated audit provides a lot more than just a corrected bill. Here's a process flow. Note that this electronic system allows for flexibility in data delivery and data format on the front end and on the back end as well, and it's tied to a data warehouse. When that's coupled with powerful analytical tools, great things can happen.
Kirk, I have clients who complain to me that they just don't have the data points, key performance indicators, or tools they need to effectively manage their business. Can you explain what Cohn Logistics offers?
Sure, Ken. We've been very information-rich for years. It's one of the reasons our benchmarking services have become so valuable. Our database of information and our resources are so broad. Back to your question. One of the first things we found when we started doing this is that companies simply don't keep any meaningful transportation data. Other than accounts payable run, they have very little information. Well, we've been collecting all of their data for years and showing them more and more year over year why it is so important. From very simple missed savings or out of territory reports to drilling down to product level or customer level costing. Today we're working with the most powerful and sophisticated business intelligence tools to provide everything a client needs, right up to intricate custom dashboards. We believe the solutions pyramid Do we believe in the solutions pyramid? Something we heard about years ago from the futurist Daniel Burris. It all starts